Welcome back. We are all watching Spotify this morning as the world's largest music streaming service makes its unusual public debut at the New York Stock Exchange. Spotify is skipping the traditional IPO and listing directly its shares on the NYSE. The NYSE is setting Spotify's reference price at $132 a share. Joining us now to weigh in and walk us through it is NYSE Global Head of Listings, John Tuttle. John, good to see you.
Good morning.
Thanks so much for joining. So how does it work in terms of putting the price together right now? You don't think it's going to open right away, right? Because it's going to take some time to come to that price.
It will take a while, and maybe it's helpful to distinguish what's different from an IPO and a direct listing. So in an IPO, you have a company, well, chief among the benefits of an IPO, you have a company that's going to raise capital, going to use that capital to grow and expand their business, possibly return some of it to shareholders so they can invest in the next great wave of technology companies, and they're looking to raise their brand and profile. You look at a company like Spotify, they're not focused on those two things, but they want the other benefits of being a publicly traded company. And so they're focused on just being listed and having liquidity and then using those shares to go out and acquire other companies. That's a different model. It's going to take a while on our trading floor to get that stock open because you don't have the investment bank that you would have in an IPO and you don't have the stabilization agent supporting the stock.
What you actually have are people who own shares of this company as a privately held company right now, selling those shares to the public. Is that correct? I mean, it's as simple as that.
And
right?
those are the only people that can sell the stock, the current shareholders.
Correct.
Right. So a human being, or maybe his computer is also playing a role, but somebody has to then go on the floor of the exchange today and set the price of those shares.
And that's what you're going to see on the trading floor.
Demand.
Exactly, and that's what you're going to see on the trading floor this morning. A reference price was set at $132 last night. No shares traded hands at that amount. What we're going to see is the market's going to open at 9:30. You're going to see orders start coming in, and we're going to gather all of the buy and sell interest, whether it come from institutional investors like pension funds or retail investors like mom and pop investors, and find where the market clearing price is discovered.
Right.
That may take a while. Alibaba, which is the largest IPO of all time, took until about 12:30 p.m. to open. This could even take longer.
Wow. And by the way, does this mean that you lose in terms of the fees? The bankers definitely lose. So who's not getting the money that ordinarily you get from an IPO?
Well, the economics are a bit different, but it does not necessarily impact the New York Stock Exchange in a material way. The bankers are being compensated for the role that they're playing in the transaction, but it's different than how they would be compensated during an IPO.
Does the reception of this offering, does it say anything about the broader market appetite for technology stocks, or is it really specific to Spotify and the popularity of that music service?
Well, I think it's specific to Spotify because, again, a lot of companies go public to raise capital to grow and expand their business. Spotify has the capital. What they want are the other benefits of being a publicly traded company. There's a finite universe of companies that fit within that bucket. So I don't think it's a trend or a hallmark for things to come.
So they say buy stock in companies that create products you know and love. I know and love Spotify. So do so many millions of other people, particularly young people.
I actually don't say that because it encourages young people to make dumb decisions in terms of investment.
Okay.
Because they'll end up buying some hot retailer that goes cold in like 3 months. So I've never preached the Peter Lynch legs pantyhose.
Really? You're not buying into that.
No. But looking ahead, I mean, I would love to get your take. Which companies do you see kind of giving Spotify a run for its money, if any? Is it Amazon? What is it?
Oh, there's a lot of companies out there. I mean, Amazon, Apple, Pandora are all in the streaming music space. So Spotify is the world's largest streaming platform and music streaming company, but there is competition out there.
And you think they're big enough to really challenge Spotify here?
Well, time will tell.
Sure. How are the listings looking? We see that fintech company Green Sky reportedly filed paperwork with the SEC in secret for a sizable IPO that could come as soon as this summer. What are you looking at in terms of the backlog of new deals?
Yeah, absolutely. Well, first of all, last year was a great year for the IPO market for the New York Stock Exchange. We welcomed nearly 100 companies, raised $33 billion. This year, even with the market volatility, we had the strongest first quarter in over a decade. The New York Stock Exchange had our best January in our 225-year history. And looking out, we see a busy April, we see a busy May, and a busy second half of the year. And it's not just technology companies, it's companies from all sectors and all geographies.
Domestic as well as international.
Absolutely.
What's more, domestic or international?
Domestic, but we do have a lot of large international companies that are looking to come to the U.S. market.
John, it's great to see you. Thanks so much.
Great to be with you.
We'll be watching Spotify today. John Tuttle from the New York Stock Exchange.